All right, welcome back. Another episode of the unofficial, emphasis on unofficial, Sage podcast. Today's a special one. Emily, I'm excited. Luckily, it's also just the two of us hosting today, which is even more exciting. We don't have to deal with that third knucklehead who's usually in the mix. Big one today, though. Absolutely. I mean, this is a milestone event for this podcast. We have the one and only Dan Hood, the official Dan Hood. Let's go with. Dan, we've known each other a couple years now. I don't think anybody who would possibly be listening to this needs an introduction to who you are, but I'll let you give it your best shot. Who are you, Dan?
How much time do we have?
We have 25 minutes for your intro.
25 minutes. All right, that'll leave us a minute for questions. I'm the editor-in-chief of Accounting Today. I've been covering accounting for about 25 years. I think that should have taken up all our 25 minutes, right? That was 25 minutes worth of introduction right there.
You know, you're a smart man, but terrible with time management, apparently.
I don't like the math.
No.
That's the problem.
No, math is tough. Numbers just don't make sense at all, which is why you're not an accountant yourself.
Correct. I am not.
Good.
I watch a lot of accountants. I talk to a lot of accountants. I've met a lot of accountants, but I'm definitely not one myself.
You were just at the center of everything in the accounting profession, but you couldn't add or subtract to save your life. Got it. So that is the intro for Dan Hood, editor-in-chief of Accounting Today. Yes.
Could not add for his life.
The man who can't do it, so he just talks about it. So, Dan, you're kind of at an interesting crossroads. At the unofficial Sage podcast, obviously a lot of the stuff we do is really focused heavily on the Sage world, the Sage ecosystem, the different products, how firms are using them, all this crazy stuff. We're going to take a step back a little bit and do a bit of more of a broad industry viewpoint because you are at the center of so many things. Technology, of course, being at the forefront of so many conversations, but staffing, growth strategies, retention of staff, pretty much anything you could possibly imagine. You're the guy who kind of sees all that content. You write a lot of content. You speak. You do all the conferences. For whatever reason, you're at the epicenter of pretty much everything in the accounting world. So we want to take a step back. And Emily actually thought this would be an interesting kind of way to I'll say a loose structure on what we're going to talk about today. One of your previous articles, Emily, what was that article that kind of got this ball rolling?
Yeah, I was taking a look at it and I just thought it was really interesting. I like the idea of talking about, accountant 1.0, accountant 2.0, and accountant 3.0. So really going into detail of what does the past, present, and future of accounting look like? What has it looked like? And how is it going to change?
And Dan, I don't know if you recall writing that, but your name...
Someone on my team probably put it together and I slapped my name on it. I haven't written an actual thing since the late 1990s. No, I do actually remember that. It was a recent column. And it was...
Yes.
Sorry.
And what was the name? It's I can't remember right now.
I think it was Accountants by Any Other Name.
Yep.
And the basic premise was that we've reached a point where the profession is changing. First off, I should say I'm unofficially very excited to be here. Thank you for having me. Unofficially, I'm psyched.
Of course.
The thing about the accounting profession is it has changed enormously, and what counts as an accountant has changed and expanded enormously when you look at you talk about 1.0 and 2.0 and 3.0, the past and the present and the future. What accountants were when I started paying attention to it in the late 90s is very different from what accountants are now. Or maybe I should put it this way. There's a lot more possible definitions of what an accountant is or can be now than there used to be. There used to be more or less you were a tax guy, you were an audit guy. And when I started in the late 90s, you might be starting to be a consulting guy. Now, you're not necessarily a guy because the number of women in the profession has expanded enormously to the point where it's roughly 50% women, though that falls apart a little bit at the partnership level, the leadership level. But two, the range of things that an accountant can be and that an accounting firm can do has expanded so much that it reached the point, and that was sort of the real point of the article, was that it's kind of hard to define what an accountant actually is because accountants are doing all these amazing and different things, right? They're doing forensic accounting and they're doing consulting and they're doing advisory work and they're doing a lot of the basic sort of stuff about accounting, right? They're doing bookkeeping and they're doing taxes, obviously, and they're doing audit and assurance work. But then they're also doing HR work and executive search work and they're doing technology work. They're expanding into all kinds of new areas that didn't exist before. ESG attest services are going to be a huge new area for accountants. They have a lot to do with the sort of basics of assurance work that the profession is familiar with, but there's an enormous amount about it that doesn't look like accounting at all, right? It looks like environmental reporting, right? It looks like more like sociology than it does like accounting. And so that was sort of the spur of the article, was there's this blooming of what an accountant can be, and what accountants can do and what firms can do, that just wasn't really there in the 1990s. The profession was what it had been for a long time. It was limited to the sort of three basic traditional stools of accounting, right? Audit, attest, and a little bit of consulting. Audit, attest, tax, a little bit of consulting. And now it's kind of, how do you even decide what an accountant is, other than, they call themselves that.
So you mentioned sociology, which I think is hilarious. Are you implying that getting a sociology degree actually would have value now in today's society?
Whoa. Don't put words in my mouth. No, I think we can all agree that a sociology degree, unless you're going to become a sociology professor, has no real world applications. No, actually, that's terrible from sociologists. But yes, the potential is that as you look around, right, that at some point a sociologist might actually be a useful adjunct to an accounting firm. Right? If you're looking at, say, corporate consulting or organizational consulting, a sociologist might actually be a pretty useful person to have on board. And this is another part of that. The sort of thing about the article is that the more I talk to accounting firms, the more accounting firms I see hiring non-accountants. One, right, we all know about the pipeline problems, the difficulties we're having finding accountants to fulfill what were traditionally accounting roles. But we're also, as accounting firms expand into all these other different areas, and they start bringing on more advisory-focused services, they start to need other kinds of expertise. So you got two things, right? You realize that we can't find enough accountants to do the traditional accounting work. Does it actually have to be done by accountants? And then two, you say, well, we're doing all this other extra kind of work that needs other expertise. Now, I don't think there's a lot of room for sociology necessarily in accounting firms, but I wouldn't be surprised if somewhere in the country there's an accounting firm or two that are looking at people with sociology degrees, saying, you know what, for our specific little niche practice in, I keep saying organizational management or restructuring or whatever it might be, but there's probably other ones where a sociologist might fit. That makes sense. They're much more, other areas, they're much more likely to hire who aren't accountants. So, for instance, data analysts, technology folks, people with all kinds of expertise in ESG services. We're seeing a lot of interest in that. So it could be environmental law or engineering, or environmental engineering, or there's a million other sort of disciplines that fall under ESG. And you see particularly larger firms starting to hire those kinds of people and building teams out of those. They still have accountants on those teams, but they are not necessarily assuming that everyone needs to be an accountant.
So you just burned through a lot of material really quickly, which I love. I love it, because now we just get to wing it and come up with stuff that doesn't make any sense.
Excellent.
But kind of shifting back a little bit, you mentioned, you started lurking around the profession in the 90s, the accounting world. So to kind of put some structure to this thing, accountant 1.0, 2.0, 3.0. Let's start with that 1.0. When you started, I'll call it working adjacent to the accounting profession, because that's kind of where you are.
You're lurking on the outskirts.
Yes, yeah. When you started just watching things and recording, what was expected, let's say 30 years ago? I know you don't look a day over 25, Dan, but let's pretend, okay? 30 years ago in the accounting profession, what was really expected of an accountant? What was kind of their role? What was it, Hollywood hasn't done justice to the accounting profession, but what did accountant 1.0 really look like, let's say 30 years ago?
Well, it's interesting. What they looked like 30 years ago was what they looked like 30 years before that. There hadn't been as much change in the profession up until starting in the mid to late 90s. But what they looked like, generally speaking, and I'm really not kidding when I say mostly white men, and they were they all wore suits. And I realize that this is not getting directly to your question, but I mean, there are things about the profession that have changed so enormously that it's worth remembering that it really was almost entirely male, almost entirely white. Everybody wore a suit every day, and that continued for a long, long time, long after the rest of the economy had given up, formal business attire. The profession held on to that. But there are three core things, right? Like I said, bookkeeping, tax, and assurance services. Those were the three areas, and the general career path of an accountant was pretty much set. It sort of it managed itself, right? You didn't need people to manage their younger accountants' careers, because there was a structure and everybody knew what it was. You got an internship, you worked at a large firm, hopefully a big four if you were lucky enough. You worked there for a certain number of years. It varied depending on the firm, and often you didn't know how long it was going to be. But you worked there until either you made partner or you didn't. And if you didn't make partner, you went into industry. And that was pretty much it. You were expected to do what you were told, particularly for the first X number of years of your career, 3, 4, 5, depending on what firm you're at. You did a lot of grunt work. You served as the unskilled labor of the accounting profession because it needed a lot of unskilled labor because the technology was simply not able to do what it does now. We take for granted a lot of things that technology does for us now.
Now,
Those were all done
I'm
by.
going to cut you off. Can you define unskilled labor? What did that mean at the time? Again.
It's things like, it's all the sort of grunt work that people talk. It's the ticking and the tying. It's crawling around in the back of warehouses, counting inventory. It's rekeying tons and tons and tons of client information for tax returns. Looking at processing and entering the data of 10,000 tax returns over the course of a tax season with no actual input on making sure that the returns are correct or actually doing the calculations. It was just about data entry. So it's literally that kind of thing. That was what the accounting model had always been. When they talk about the pyramid model, I'm making a pyramid shape with my fingers. No one can see it. There you go. We need an interpreter along the side to say.
Yes, thanks for that. Thanks for the visual.
Speaker makes a visual motion in the court record. That pyramid model, which was created in the 30s, apparently, and I didn't realize this until very recently, someone told me this, that it was literally invented by Arthur Anderson, the guy who founded Anderson, said, what should the model of the accounting firm could be? There's a couple of different models that a partnership can have. And he said, our model should be pyramid shaped, which means you have a broad base of unskilled. And unskilled is probably not quite fair when you talk about people coming out of college, right? They've got a 4-year degree and so on, and they've had some exposure to accounting. But really, they are effectively unskilled in terms of the way they were employed by the firms. So they just were doing all this kind of data entry and rekeying of information from clients and crawling around, like I said, in the back of warehouses and going in and cleaning up clients' books at the end of the month. That kind of very, very, very entry level sort of didn't require a lot of experience and mostly was just a heads down, do what you're told for 3 or 4 years. So that's what we mean by unskilled. And the notion is the pyramid model winnows away some of those unskilled labor. Some of them become skilled and move up. Some of them are like, this is terrible. Why am I doing this? And move away. Some rise up for a couple of number of years and then, maybe 7, 6, 7, depending on where the firm is, sometimes as many as 13. Then if they don't make partner, they go somewhere else. And that's how you get to that apex at the top where the partner group is there. So I took unskilled and then went way far away from it. But it's that you come in and you're just doing what we would now all assume would be computerized sort of work.
So the technology wasn't great 30 years ago is what I'm hearing. You mentioned
It was not.
bookkeeping. By the way, you also did mention a 4-year degree, which we'll circle back to that once we get to the present portion of this discussion. But the technology 30 years ago, when did you really see, I'll call it the first technological revolution inside the accounting profession? Everyone's doing everything on paper, by hand, accounting inventory, the bookkeeping is all done on paper. When did you really start to see like a major shift into more of I'll call it a modern era type of technology?
I will say it had begun before I started. So I would say in the 90s, throughout the course of the 90s, there were still plenty of areas where it hadn't infiltrated yet. Plenty of areas where there was still a lot of basic things to be computerized or be digitized. But it had started, I would say. So that by the end of the 90s, you had, depending on it was tax prep or accounting or general ledger software, in each one you had as many as 15 or 20 different competitors in all those fields that could do the basic work. It still involved a lot of, rekeying, a lot of heads down sort of manual entry stuff, but it had the basic functions of accounting in tax and bookkeeping had been pretty well started to be automated by the late 90s. And then there was this period between the late 90s and somewhere around 2005 where all of those companies disappeared. The 15 to 20 accounting packages, they got winnowed down through acquisitions or through just they got smaller and couldn't keep up their basis. And Sage was one of the survivors. Sage was one of the big companies that came through that survived that winnowing out. And the similar thing happened in tax prep. And so what happened actually, what was interesting was that you had all these people trying all these different ways of digitizing accounting, and then a lot of them got acquired and got winnowed down, and you ended up with sort of the modern model that we have now. It's been improved significantly since the early 2000s, but it still had all kinds of problems. It still has all kinds of problems with integration between different software systems. integration between whatever system you're using for your write-up and whatever you're using for your tax prep. And so for years, integrations between systems and making sure that data flowed between them was the problem. That was the thing that happened a lot, for instance, between the first decade of this century. And then, really started to get solved when we started to move much more seriously towards the cloud. But even there's still issues. A lot of different systems where people will talk about. We need APIs. We need to get better integration. There's still friction. There's a lot less friction than there used to be. But so that's all to the good. But
And I still work in this space. So I'm working with clients every day who are trying to integrate Sage Intacct or other systems to other systems, and it's still very much a need. Because a lot of times what happens is, people decide to integrate something and it may not work. And after you spend thousands of dollars in trying to integrate new systems, you're going to be disappointed.
Yep. Now, and that's the thing. That's 25 years, let's say, after we started this revolution. We're still having these issues. I will tell you, it is still a problem, but it's nothing compared to what it used to be. Essentially, it used to be we just assume we'll have to rekey the data. We just assume that if I'm taking something from one system to another, I'm going to have to rekey it. Hopefully, I can get it out of the other system in a format that makes it easier to rekey. But still, you're just you're looking at a lot of manual labor still in the process. But even still, as you say, only after 25 years, this is still an issue.
Mm-hmm. Well, I think that's a perfect segue to move us to maybe the accountant 2.0 to talk about, what is the present accountant doing? I mean, you touched about this in the beginning of, people hiring people who aren't an accountant to do accountant adjacent work. So what does the accountant 2.0 look like?
So among other things, they have a lot more options, right? And I realize this is sort of silly to put it this way, but when you think about that in the context of, now they don't have to wear a suit. That's for people who weren't around when that debate was going on in the profession. It was huge. There were firms that were sure that the entire accounting profession was going to collapse if people came in, anything other than a suit. It's one of those things that it's hard to imagine how important a change that was, but it was pretty change.
And for those who are just listening and not watching visually, Dan is wearing a 5-piece suit right now as he's doing this. Yes.
It had.
Well, that's all you can see. There's actually 6 suits underneath. That's because I've got to go on a plane later and I don't want to check a bag, so I'm just wearing everything at once. Sorry, now I'm imagining myself going through customs. That's not important. The important point is so it's changed a lot. And what's really changed is that you could pretty safely say the accountant 1.0 was in tax, in bookkeeping, bookkeeping/accounting, or in assurance. And now, if someone says they work in an accounting firm, you have no way of knowing what they're doing because there's a million things they could be doing. One of the things that you can be sure about, or relatively sure about, is that they are less likely to be focused on compliance work than on advisory, or at the very least, they're likely to have advisory work be a goal for them or a much larger portion of their day. Back in the 90s, the vast majority of what accounting firms did was compliance work. They did some consulting work. That's when Anderson Consulting rose up. That's when all the big 4 firms consulting departments came about. But they were pretty heavily focused on compliance work. That compliance work, it hasn't gone away because somebody's got to do it, and accountants are good at it. But the focus of most accounting employees, or a lot of accounting employees, is moving towards more of a focus on advisory. So it's less historically focused. It's less about regulatory mandates. It's less bound by those sort of calendars. And it's much more focused on delivering more value to the client, value beyond, and to be clear, clients get a lot of value out of making sure that their tax returns are done and that their audits are appropriate and acceptable to whoever's mandating them and all that sort of stuff. But they get a lot more value out of advice that helps them build their business or make sure that they're running their financial lives well. So accountants are focusing a lot more on that. They've always sort of been involved in that for their clients, helping them out, giving them advice, telling them what to do. But there's a lot more of a focus on that. At the same time, it's the opportunities for working anywhere you want to work in accounting. You want to be a forensic accountant. You want to work in the cannabis space. You want to work in and actually, I'm going to stop on cannabis space just for a second because it's a great example of another way in which things are different, which is that you can be an expert in accounting now, much, much earlier in your career, in a way you couldn't be in the 90s or the 70s or the 80s or anything before that, where the theory was it was much more hierarchical than it is now. And the notion was, there weren't that many industries coming along. There weren't that many new areas for accountants to practice, but now there are so many more areas for accountants to practice in that accountants haven't really practiced in before. It's much easier for a young accountant to become an expert. You think about something like Bitcoin. It is impossible to have a 30-year history in Bitcoin because it hasn't been around for 30 years. It's only been around for 10 years. So even if you just got out of college 5, 10 years ago, you can almost be as much of an expert as, somebody who's a 30-year partner at a firm, because that age doesn't give them any more experience. Similarly for cannabis, or for ESG, or some of the other new areas that are coming along, it's much easier for young accountants to be heard and to become experts and to become leaders than they used to be able to. I'm trying to think. There's a lot of other things where accounting 2.0 is really different.
While we're hanging out in this kind of 2.0, accountant 2.0 zone, Dan, you mentioned a couple things. The first of which really hits home, especially from a Sage perspective. The technology got consolidated pretty hot. It sounds like kind of that late 90s, early 2000s zone, if I'm not mistaken.
Yep.
So in your viewpoint today, again, you sit at the center of a lot of stuff. How many major technology players do you see existing in the accounting sector? And let's spread it across everything from practice management to tax to CAS, bookkeeping, accounting, kind of the major tech players out there. How many do you really see?
Well, that's a really interesting question, because I'm going to go back a little bit to the history. We talked about that consolidation. That somewhere around 2005, we sort of looked out at the universe and said, how many companies are there that are doing accounting software? And we're like, well, there's 4. And then how many companies are there that are doing tax software? And we're like, well, it's pretty much 3. And at that point, you couldn't imagine there being more, because they had consolidated all these, lots and lots and lots of players have been winnowed down to those 3 or 4. And you couldn't imagine there being a lot more, because it cost a lot more to do, right? Because you didn't have the cloud, you didn't have the internet. You had the internet, but it wasn't to anything like the degree it is now. So the barriers to entry were much higher. Cloud comes along, internet gets much stronger, bandwidth gets better, all the things that we now sort of take for granted. Those things come along, and suddenly the barriers to entry for creating software, whether it's tax software or accounting software, or for some little piece of those puzzles, those drop a lot. So I think, when you talk about, how many players can there be, I think there could be 1 million. That's an exaggeration. There can be a lot more than there used to be, because 1, it's much easier for them to do it. But 2, we've also reached a point where people can do very small bits. You look at any of the ecosystems around the big, accounting platforms, right? All the apps that are built around them, that are integrated with them, and so on. A lot of them do very, very, very small things. Now, I don't think those are the kinds of players that you're talking about, Doug, right? You're talking about sort of bigger, put it this way,
the consolidated
platforms that have ecosystems.
Exactly.
Right? I think you could easily see in any one of those, in either tax or accounting, you could see maybe coming up on 10. I don't think there are 10 now, but I could easily see space for 10 at some point. That'll fluctuate, going back and forth. I think we're more like 5, 6, 7 now than 10, but that's up from the 3 or 4 that we were at in 2015 or 2005. Sorry. And then again, when you say there's all these other players out there doing interesting stuff along with them, it's fascinating, because you take something like, we've seen some other players pop up that don't actually do accounting or tax work, but they tie into them, and they've created a category of back office enablement that you would never have thought about before. You would have thought, well, there's accounting software, and maybe there's payroll software, and that's about it. But then there's some other people who come along and make products that take over whole chunks of the back office that you would never have thought could be taken over. And it's only been enabled by the sort of integrations and digitization of all the information, so that it can be shared among a bunch of different systems. So I think I'm realizing I'm going way beyond answering your question, or avoiding answering your question, because
that's the charm of
on
you.
those things. But
that's your charm.
And Dan, what you're referring to is the best in class model. Am I correct? Yeah. So having core systems and building upon there for other best in class systems, and then the ability to integrate them all into one another.
And that's much, much easier to do now than it was 25 years ago. When they talked about best in class versus suites. This is an argument that goes on sort of waves throughout accounting history. And best in class was really hard, was much, much, much harder than it is now, because integration was difficult to do. People will say, well, if you get, the 5 different programs from 5 different companies, How will you ever connect them? That's going to be a nightmare. It's still pretty difficult, but it's much less of a nightmare than it was.
Another thing you mentioned earlier, let's throw technology aside because that's a whole rat's nest that could last 5 hours of conversation. You mentioned the 4-year degree when we're talking about accounting 1.0. We're now in the 2.0 zone. So that 4-year degree isn't not really a 4-year degree anymore in the accounting world. We have a bit of a pipeline problem. Newsflash for anyone who doesn't know that the talent shortage.
Wait, what are you talking about? That's crazy.
I promise you, Dan. There's a lack of accountants out there. I can't believe you're just hearing of this. I think you published a couple of my articles that talk about this. Regardless, let's talk about the 5-year requirement, that 5-year degree. So when did you really start to see that? I'll call it, I don't want to say hurt the pipeline, but affect the pipeline. Because again, you've been doing this for a long time, long before that was ever a requirement. When did you kind of see that shift start?
Well, what's really interesting there is when that was put in place, which is the late 90s, across the 90s, because it really was, that had to be done in all 50 states individually. There was no concept that there was a pipeline problem. No one had any idea of this, and it made perfect sense to say, you know what, an extra year of education makes accountants look more professional, look more credentialed, look more serious. Right? We're starting to look more like lawyers and doctors and other major professions that have some extra educational heft to their credentials. What they didn't know was that at the time, what had begun in the 90s, separate from the 150-hour, was a big hollowing out of how many people were entering the profession, because you have two things going on in the 90s, right? You have a massive expansion of the financial world, just lots more hedge funds, private equity funds, commercial banks, investment banks, all that sort of stuff, and that explodes. And at the same time, you have technology, right, as an industry sector that also grows enormously with the internet. So you have these two huge industries coming together, either expanding hugely in the case of finance, or just start from basically scratch and becoming enormous in the case of technology, both of which are huge consumers of accounting talent, or of talent that might have been turned to accounting if those two sectors weren't there. So they're both grabbing huge numbers of people who have the aptitudes and the skill sets and the math knowledge and the comfort with analysis and that sort of thing that you would normally expect to go into accounting. They're not going, or fewer of them are going to accounting, because they can make a lot more money in technology and a lot more money in finance. So a huge portion of the people who used to go into accounting are now going into tech and finance. At the same time as accounting is making it more difficult to become a CPA, right, by adding that 5th year. Those two trends, no one knew at the time what was happening with the pipeline. So you can't really blame them for not knowing that when they put the 150-hour rule in. But then, as those things started to become obvious, right, as the problems with the pipeline started to become obvious, the 50-hour rule became sort of a flashpoint. And I really think it's definitely an issue, right? There's a lot of young accountants or young would-be accountants who say, I don't want to spend a 5th year in college, particularly over the last 10 years as the student debt has become a much bigger issue. But I would say while it's a problem, it's not the main problem. The main problem is that we just need to find ways to make accounting a lot more exciting and accessible and interesting for people. Among it is an interesting thing about the 150-hour rule, the 5 years rule, is that the National Pipeline Advisory Group that the AICPA stood up to sort of look into this, they went out and started talking to a bunch of colleges and discovered that at a lot of schools, they're thinking about moving to a 3-year model, right? Not just, not a 4-year model, which was sort of what the 150-hour rule was built on. Sure, everyone gets a 4-year degree, or not everyone, but everyone who's looking to be an accountant gets a 4-year degree. We'll just add a 5th year. But now schools are looking at a 3-year degree, moving from that. A lot of that's driven by COVID and so on. So this whole, what does it take to becoming an accountant, and particularly what does it take to become a CPA, is going to change enormously when this moving us a little bit into accounting 3.0. The educational experience and the credentialing experience of the accountant 3.0 in 10 years is going to look enormously different. Just as it does, it looks different now than it did in the 80s and 90s, right? They didn't have the 150-hour rule. They didn't have a computerized CPA exam. They didn't have the shape of their exam was different, right? The types of questions and the number of sections and that sort of thing was very different. So all those things are changing, and they will change again over the course of the next 10 years. I don't think the 150-hour rule, we'll never see a point where everyone says, 150-hour rule is gone, but we'll see a point where it sort of fades into irrelevance as the profession starts to focus more on competencies, right? Making sure that you actually learn something in your college experience as opposed to just having taken 150 hours worth of classes.
Yeah, no, that makes sense. You actually stole my transition into Accountant 3.0, but that's okay. I had a really good one lined up, but it's fine.
Oh, give it to us. Come on.
No, you know what? No, you ruined it. You ruined it. So here we are. Now we're in a 3.0. The
Now
future. Now we're predicting. So we have no clue what's really going to happen. You brought it up a few times. Right now in the 2.0 world, everyone's starting that shift to advisory, the most overused buzzword phrase you can possibly imagine, that a lot of firms can't truly define what that is or how to do it or how to charge for it. But again, separate issue there. So Accountant 3.0, looking forward, let's bump it out, I don't know, 10 years, right? Let's get crazy with it. Forget 5 years. 10 years out, what's an accountant gonna look like from your perspective, Dan?
That is an excellent question. And obviously, this is all leaving aside the possibility that AI and the singularity approach and everything is changing. We're all just servants on the AI mind grid.
Actually, and I waited this long to tell you, Dan, but Emily is she's an avatar. She doesn't exist.
I am.
She doesn't exist.
Yes.
Oh, no.
I don't
she
exist.
exists. She's just not human.
Well, sure.
I'm here to take over the world.
Yes.
I, for one, welcome our artificial intelligence overlords, and I wish them well trying to manage
I will give them your best.
Thank you. And I wish them well trying to manage the mess we've left behind. But
what are accountants looking like 10 years back?
Yes,
back to that.
Exactly. Assuming there are accountants, assuming human society still exists,
Mm-hmm.
what are they? They're going to look like a lot of very different things that they look now. One, accounting firms are going to hire a lot fewer accountants. They're going to hire a lot more experts in whatever industry they're focusing on or whatever service line they're focusing on, right? So if they are, they're going to have a lot more. If you deal with car dealerships, you're going to have a lot more people in your team who've worked at car dealerships. Or maybe have engineering experience, or not everybody's going to be accountant because there's simply not going to be enough accountants to fill all those roles. So you're going to be looking at a broader range of people who work at accounting firms who we wouldn't necessarily think of as accountants because they don't have a degree in accounting, they don't have the background in it, but they understand it because they've probably been taught it at the firm. Right? The firm said, "I can't teach you everything you need to know about environmental law or." Measuring carbon output. But if you come knowing that or having some background in that, I can teach you about how the accounting system then looks at that, right? So that's, I think, we're going to find there's going to be a lot of people who aren't what we would think of as traditionally educated as accountants working at accounting firms. They're going to be doing a lot of different things. There will still be compliance work done, but I think a lot of that will be computerized to the point where most people at accounting firms don't even think about it's being done. It's just sort of handled in the background, often by artificial intelligence or just by super highly developed automation, RPA, where it's so advanced and reaches the point where it's not artificially intelligent, but it just takes care of everything. You don't need to worry about it. And then what they do is they look at that data and they look at the insights from that data, and then they turn that into actionable advice. So I think you're going to find a lot more accountants be giving advice and being comfortable giving advice. That's a cultural issue that we don't really talk about in the course of this move from a heavy focus on compliance to a heavy focus on advisory. Is that a lot of people went into accounting because they were comfortable with compliance, right? That was the kind of work that they wanted to do and that they were comfortable doing. We're going to find over the next 10 years that the skill set and the cultural fit of accounting firms brings in a lot of people who are much more comfortable with an advisory focused kind of service. They're much more comfortable predicting the future. As we said, we don't want to predict the future. None of us really want to predict the future. But if you're an accountant who's been focused on compliance, you really don't want to focus on the future because you're comfortable saying, this is what happened last quarter, but I can't tell you what's going to happen next quarter. That's going to change. You're going to find that a lot more people at accounting firms are comfortable with that and have been trained to be comfortable in that. Because that's going to be an important focus of firms going forward. It's going to be about helping with decision making, helping people make sure that their business or their personal lives are successful and that they're hitting the goals that they want to hit. I think just throw out some other things. It's going to be different. It's going to be much more diverse, not just in terms of talent sets, but in terms of race and gender, a million other categories of diversity. Neurodiversity is going to be a big one. It's going to be a very different group of people working in accounting firms doing a very different set of things.
So you brought up a couple different service lines that are starting to be rolled out across the profession, different advisory portions, all the stuff. What's one big swing, Dan, that you don't really see any firms doing today that you think is going to be a big player in the accounting sector?
I can't say anything that I don't see firms doing right now. If I could, I would be doing it. I wouldn't be on this podcast. I'd be out starting an accounting firm to capitalize.
No, we
that. But
covered that. We covered that. You can't
Yep.
you can't do the pluses and minuses well. We know
Right.
this.
Yeah.
No, I'm terrible, but I could hire someone who could. Well, like I said, I probably couldn't because
And we just talked about it. You don't have to be an accountant. You can learn that.
There you go. Exactly. And if I wait, 2-3 years, the computers will do it for me. Hoping. I'm looking at you, Sage. Make sure this happens. But no, I think the area that I think has the most potential is ESG. And I know there are already firms in there, so I'm not breaking any ground here. But I think the accounting profession should be getting on the ground floor of this in a huge way. When you look at the potential for reporting and the seriousness with which this is treated outside this country, and I think more and more in this country, we're going to find that is going to create an appetite for services that no one will ever be able to satisfy. The reporting they're going to need to be doing, that companies are going to need to be doing for that, is going to be so enormous that there's huge opportunities, and not just at test. I think one of the I won't call it a mistake, but I think one of the things that the profession tends to focus on too much is the test aspect of ESG. Right, the companies go out and get their carbon footprint measured, and then or their environmental impact or their social impact measured, and then accountants come in obviously and attest to it, say yes, that's accurate. That's you can rely on this information. And that's obviously a huge area for accountants. It's definitely part of their skill set. But I think just setting up the systems, setting up the reporting systems for those is huge. And there's not many people who are good at setting up reporting systems, right? Who's good at setting up a reporting system? Accountants. They've done it for finance. Yes, they haven't done it for all the stuff that goes on in, like I said, measuring a carbon footprint or a social impact or that kind of stuff. But it's still about taking data, gathering data, making sense of it, and turning it into usable information. This is a core competency of the accounting profession. And if they hire enough, enough environmental engineers and environmental analysts and that sort of thing, they can figure out, they bring the expertise, the reporting expertise of their core accounting function, attach that to those other experts, and then turn that into a way to help every company in the world figure out how to do this reporting, because they're all going to have to.
And Dan, by the way, ESG, a couple times, we have this thing amongst the three hosts here, only two today, thank God, where anytime one of us uses an acronym and doesn't clearly explain what that acronym is, it's $50 goes into a general pool. All right. And we're going to either raffle it off to a listener, we're going to do something crazy. Our third host who isn't on this specific episode, he'll get a tattoo. I don't know, something crazy. We'll figure something out. All right. So ESG, can you just explain to listeners what ESG is?
So environmental, social, and governance reporting. So it's about, like I said, the environmental is pretty obvious, right? It's are you polluting anything? How much groundwater do you use if you're a Coca-Cola bottler? How much fresh water is nearby for you, and how much of it are you using? How much electricity do you use? Do you emit any pollution? What's your carbon footprint? What kind of materials are in your supply chain? That sort of thing. Social and governance are a little bit more fuzzies. Fuzzy is a perfectly reasonable word, but they're a little bit further behind. But social would be how are you on diversity issues? How do you impact the community around you? Right? Are you a Walmart who? And I'm throwing this out as an example. I'm not saying that Walmart does this because they will come to my house and kill me. But are you going in and are you destroying small businesses? Right? Are you changing the fabric of town? Are you putting too much pressure on your supply chain? That sort of thing. There's a bunch of other social issues you can go into. In terms of your impact on everything around you, on your employees and the policies you have, that sort of thing. And then governance is about how are you run, how transparent are you as a company, how well do you obey laws is literally an interesting. You would think that would be one that wouldn't come into question much, but there's a lot of that. Non-compliance with rules and regulations is becoming an interesting issue for accountants to look at among their clients, and whether they need to report on it. That's a big issue these days. So governance is all those sorts of aspects of literally how you run your company and how you comply with all the important laws and that sort of thing. I'm way oversimplifying that, right? These are huge areas. And as I said, social governance remain to be explored a little bit. ESG, environmental stuff is the stuff that's really going on right now. We know, the SEC was just working on a regulation. There's regulations all across Europe being promulgated around the world. There's a whole new standard setting board around sustainability that's finally combined, whatever it was, 300 to 400 different standard setting boards and framework establishers. And they've been finally coordinated into a single or potentially single standard setter. I think we're going to see a lot more of those rules and regulations come out. And that's accountants' time to shine.
I like how you said they're accountants are the ones who just make things boring. I love that. Yeah, they'll put a formula behind it. They'll take a service. They'll make it terrible. No, I love that.
To be clear, I didn't say that. He said that. He inferred that from what I was saying.
So we've shifted from accountant 1.0.
Recorded.
It is recorded. Yes, but that's okay.
There's no denying.
We'll have to bleep out your dark view on Walmart leadership. But in the interim, that was a good one. I like that one. In the interim, we hit that accountant 1.0, 2.0, 3.0. So it sounds like accountant 3.0 is going to be an AI avatar that basically does ESG reporting, if I'm not mistaken. That's what I heard from you.
That's what, yeah. Well, also
that's it. With also not
business.
Yes, and no one who actually
and they don't wear a suit. It won't wear a suit.
That's
They're
right.
probably not wearing any clothes at all.
No, that checks out. No, probably for the better, unless you're me. But Dan, that we've eaten up enough of your time. We've wasted enough of everyone's who's listening this time today. We do appreciate you coming on. I usually end these things with a horrible dad joke. All right, so I'm gonna lay one on you. Oh, boy.
I am really bad at these.
Yes. Well, it's okay. You know what? You don't have to answer today. That's why we have
That's nothing to feel bad about. That's actually a plus for you.
So, Dan, where do sheep take vacations?
There's so many things I want to say Bahamas, but you got a better one than I've got. But it's
no, Dan, you nailed it on the head, my friend. The first one to get it, the Bahamas. Oh my Lord, I loved it. You're the first one to actually get it. That's perfect. Oh my gosh!
Congratulations.
You got that dad look to you.
Exactly. I
you got that dad look to you.
Good things about me. I'm a little ashamed. Ooh.
No, but can we get one more sheep Bahamas out of you? Oh.
That's more of a goat.
Yeah, I don't know what that was. It sounded like you just had a bit of a stroke there, but what are you going to do? What are you going to do, my friend? I appreciate your insight on everything across the board. You've been around it for a while now. A lot of changes happening. The education requirements moving forward will be really interesting to see how that plays out with everything. Appreciate you stopping by, my friend, and I hope to have you back before too much longer because everything is changing so quick that we'll do this again in a couple months, and it'll be a wildly different conversation, I imagine.
Yeah, no, literally everything we've said is outdated. As soon as this podcast is done, it's all changed. So.
Yes, but nothing.
Well, thank you for having me. It was a lot of fun.
Nothing from your publication is ever outdated. Let's be clear about that.
No, it just becomes classic.
Yes, evergreen, absolutely. Yeah. Well, appreciate you coming on, my friend, and I look forward to connecting again with you soon. Take care.
Thank you both.